Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors, October 16th, just after the close. Last week, if you recall, I used the term cavalry charge to describe the equity markets, from small to mid to large. Demand was just banging the markets. This week, just what the doctor ordered. A little backing and filling, some drawdown midweek into Wednesday afternoon met with demand. The type of action, if you're long, and we're long in our equity strategies, you'd like to see. Some of that move from last week, and don't forget the Russell 2000 was up over 6% last week. Some of that move digested. Doesn't mean we have an answer for next week, just nice to see this week. Interesting chart that I'm going to share with you. Interesting table, rather. Blackrock, who many of you know are the creators of iShares, one of the largest money managers in the world, put out their Q3 inflow chart this week. I'll tell you what, I was shocked to see that less than 2% of the capital invested in iShares in Q3 went into equities, went into equity ETFs. You could have named the bet and I would have lost. So I'm glad I didn't get offered that kind of wager ahead of this information. I think that goes to show how nervous investors and traders are today, whether it's COVID, whether it's politics, and obviously it's a combination of both, really has gone a long way to get the nerves rattled in investors. And I can tell from calls I get day to day. Most of the calls are, what can go wrong? What's going to go wrong? Very few calls are asking, what can go right here? What does next year look like? What does the liquidity from the Fed look like? I only mention this because it's very important for a trader and investor to ask both questions. And we do that often at Cumberland. When we're trying to stress test and look at positions or look at ideas or look at theories on the markets, what can go wrong? What can go right? It seems like currently there's too many questions of what can go wrong. We talk about the market pricing some of those questions in. You know, politics and COVID have been a large drain on the emotions of people in this country, really worldwide, but in this country I'm specifically speaking to. And I wonder if it's overdone on the negative right now, emotionally. If you read too much news, if you watch too much news, you get the sense that we're a country in decline. I'm not buying it. What COVID should do, and has done for me, is let me leverage some of this time to really catch up with what's happening in this country from a technology and scientific standpoint. I encourage everybody to Google and become familiar with the term messenger RNA, mRNA. This is fascinating science. Use some of this downtime from COVID to learn about some of the things going on in this country. Worldwide, certainly, but in this country. Maybe the U.S. is in the first or second inning of this next run. When you start to discover a scenario where messenger RNA, and I'm just using this as an example, can possibly manipulate cells to combat diseases, and you start thinking, where could that put us 10, 20, 30 years out? mRNA was discovered in 1961. 60 years later today, it's only starting to creep into the lexicon of investors. We're long biotech in both US ETF and tactical trend. Some of those companies won't make it. Some of them will become spectacular successes. So again, just getting back to my original comment. What can go wrong and what can go right? Don't pay an overabundance of weight and attention to what can go wrong without also asking what can go right. Have a great weekend. We'll see you next week.
Hi, it's John Mousseau. I am the President, CEO, and Director of Fixed Income at Cumberland Advisors. It is Friday afternoon, October 16th. Bond market this week, yields a little lower. 10-year down from 0.77 to 0.74. 30-year bond down from 157 to 153. A little of that's based on some disappointment on initial jobless claims, which were higher than expected. At 898,000, the market was expecting 825,000. However, continuing claims declined. That's good. This week, PPI off the bottom, now at about 1.2% trailing. It was 0 back in the summer, trailing 12 months. CPI steady, still at 1.7% trailing. Core inflation was as low as 1.2. So we are seeing some inflation creeping up slowly. Important to remember that bond yields on treasuries are still well below the rate of inflation when you compare a core CPI of 1.7 to basically a 10-year treasury bond of 0.77. So our viewpoint is that yields move slowly higher over time. Bond market volatility has picked up a little bit. We think that is certainly part expectation of maybe a blue wave. We don't know that for sure, but the markets clearly are taking the clarity that seems to be in the polls as a sign for better equity markets. My colleague Matt's certainly talking about that. And on the bond market, that means probably slowly rising rates over time. Remember, a few months ago, that 10-year bond rate was 0.5 and that 30-year bond rate was 0.2. So there's clearly been some movement up towards a reflection of a better economy. We think that continues as the rest of the year unwinds. Municipals, supply, visible supply, up large, over 21 billion. That's the highest it's been this year. Muni rates are about, on the AAA scale, are about 18 basis points ahead of where treasuries are. We would expect to see some softness in the muni market, certainly maybe some buying opportunities coming our way as supply continues to build. What's going on? Muni issuers are basically saying, you know what? We want to get supply into the market before the election. If you remember 4 years ago, the markets were very surprised when President Trump was elected. And what did we see? We saw tremendous volatility on the bond side, and we saw higher yields, of course, that eventually came down. But at that point, they were expecting lots of tax cuts, lots of spending, lots of infrastructure. And of course, it takes a lot of time to get any of that in the system, and it took a whole year to get a tax cut. So that doesn't change issuers' memories of what rates did. So if you were thinking of coming to market, you want to probably get it into the pipeline before the election as opposed to after. That's why we're seeing this bulge going on right now. This week going forward, we will be watching out again for initial claims. We'll also be looking for new home sales and see how those continue to increase because they have been on a tear. So we hope you have a great weekend, and thanks a lot, and we'll see you next week.